See, who has not been on stage? Have you been on stage? Oh, yeah, I saw you had your hand up first. Can you please come up on stage? I'm looking at you. Yes, bring your notes. Give her a big round of applause. Harriet?
Yes.
Hi, welcome up. How are you today?
I'm good, thank you.
Very good. Very good, thank you. So, what are your thoughts on this? So how did you draw your take profit line, and what were you thinking?
Well, I tried both ways. So
all right.
You said that obviously put the horizontal trend.
Thank you.
So that was
Okay, so what you're saying is when you have this trend like this, so you're either using the last high,
yes,
horizontal line,
yes,
and then what?
take the price and 1% below, which
so if the price is, what was the price?
is 28.76.
28.76, and then
times 0.99.
yeah, so what means the take profit is slightly below.
Yes, it's 28.47.
Yeah, does that make sense? Yeah, is that correct? Is it okay if it's slightly different?
Yes.
Are you guys awake?
Yes.
Good. Okay, excellent. So your take profit is, what was the take profit?
28.47.
28.47. Now, what was the second way? You tried both, you said. So how was the other way you did it?
Yes, so I went with the angle trend line as well.
So the upward trending?
Yes, so at 51 degree, like
So 51, okay. So why did you measure the angle like this? Or did you?
what do you mean?
Yeah, so
Yes,
you...
we take the average, don't we?
The average, yes. So what you need to do, just to make that very clear, is if it's like this, right, and you have one going up like that and then like that, then this is it, right, that you need to measure the angle from the support all the way up to the resistance. All right? So say this is 51 degrees. Here, it doesn't go all the way up. Do you see that? So we do not measure that. And then we measure from here up to here, which is maybe 49 degrees. From here to up here, which might be 57 degrees. Does that make sense? And then the last one, and then we take the average of all these, and let's say that's 49 degrees, and we pull this all the way up, and so I think it looks a little bit like this, right? So where the upward trending line and the angle meet, that's where you look to 1% below to put your take profit in. Does that make sense? A bit more? Who's confused? Who's frustrated? A little bit. That's good though. Yes, very good. So you know you're learning. All right?
So obviously that line needs to cross.
Yes, exactly. So what you're saying is then, right, so where does these two cross? So over here. So then you hold your mouse there. The price might be, what was your price?
Well, mine was 30.27.
30.27, yes, fine.
And then we go 1% below.
Yeah.
Times 0.99.
Yeah.
And for me it was 29.96.
96. Excellent. Yeah? Very good. Are you happy with that?
Yes.
Okay, very good. Well done. Give a big round of applause. Yeah? Good? Do you have a question? Yeah? Hey, Jenny? Can you have the microphone here, please?
So, however, in this case, just from like an observation point of view, she's taken a profit way after the earnings, right?
Ah, yes, could be.
On the 4th of May, so...
How far away is the earnings? 4th of May?
From the 28th, I mean, you don't know what it's going to do after.
Ah, well, really...
Is it even worth getting into that?
Yeah, I'd say so. It could move up a lot faster as well. We just estimate it could go up in 3-4 days as well. We don't know. So if it does something like this, it's probably going to go a bit faster. So I guess it's a good observation, and it kind of depends because we don't know how fast it's going to go up basically. And it might go up very fast, we don't know. But as long as it's more than 2 weeks away, I'm happy to do it. Because imagine if it just goes halfway, then you close your position, you take 1 or 2% profit, and then you see what happens after earnings, and maybe you can enter again.
So you wouldn't think that there's the potential for it to switch, like to a downtrend? Because of those earnings?
But you closed the position before. Yeah, so you close, you sell it.
So
you
it
sell it.
hasn't done that.
Yeah.
There were 2 weeks to go before the earnings.
Yeah.
Get your ass out of that trade anyway.
Yes. Exactly.
So you wouldn't look at, having made that analysis, even if you went into it, you'd be like, okay, well, I'll just chance my arm. Maybe I can take my profit before the earnings. You set a little alarm there to check.
Yeah.
And if it's not there, bang, get the hell out of Dodge.
Exactly. Yeah, exactly. So a couple of days before. Now, what was your entry price? Just to show you something. 20.69? 20.49. What was your take profit level? Take profit? 28.23. What was your stop loss? 19.3. Alright, so this means that we have a risk reward ratio of 6.5. Do you see that? Which means that even if it just makes it halfway, we're going to make a 3-to-1. Does that make sense? Yeah. So yeah, if it goes up to 6%, I'm happy. But yeah. So this is the quicker way of doing the risk reward ratio. You take this tool, double click on it, and then you put in your values, and it tells you automatically. And we might have another calculator you can use for it as well. Question? Yes. All right. No? Oh, you was just raising your hand? Oh, I was so happy. No, that is a question. If you need help, that's a question. Because it could help anyone. What's your question?
I just know how to draw the inner lines on this one. Is it the inner line?
The inner resistance line? You mean the inner resistance line? Yeah? Okay. That's what we can look at together. Yeah? Alright, so do you mean this line right here?
No, the middle ones, the inner ones.
So we draw it lower like that?
The angle.
The angle. Okay. Alright, so.
Yeah, those ones.
Yeah, so keep it simple. Watch the video over and over again. But the way you do it, right? You take here where you have the trend lines, press the arrow, you find the one called trend angle. Press it, and then you press once, you draw it up from support to resistance. And then if you have a downward trending, you just do the opposite. And then from here, then you draw it to the second one. Does that make sense? And then you do the average of those two, which now might be 44. And then you draw it up to where this meets the resistance, and then you do your take profit 1% below. Does that make sense? Hello?
Yes.
Very good. Okay, last question before we're placing the trade.
You drew those two angles. Suppose the other preceding those waves were touching the resistance. Were you going to keep on drawing the angles?
Yeah, if these were touching the support, I would keep drawing them, yes.
To the end.
Yeah, no, not to the end. So from the support to resistance, support to resistance, support to resistance. And then if we have more, support to resistance. Does that make sense? Yeah? Very good. Great question. So are we ready to place the order?
Yes.
Yeah, let's do it the easy way. So it's only 3 people ready to place the order. That is not going to be enough. Are you guys ready?
Yes.
Okay, let's do it. So, go to our trader. Amen. Can I get some placing order help? Excellent. Good sprint. Thank you. So, what is the ticker we're using? Yes, Alfred uniform. Was that what you said? What? Alpha, yep. Uniform Delta Charlie. Are we choosing the CFD or the stock?
CFD.
Yes, CFD, excellent. And now, are we using a market order? Market order? But the market is open.
Stop.
Stop order, yes. Stop order, boom. And what is the order price? Are we selling or buying?
Bye.
What color should it be?
Blue.
Yes, blue. So, order price, what's the order price?
2069.
2069. Exciting. But no emotions. But still exciting. 2069. Expiration, good till cancel. Take profit. Whatever you guys have, we are going to enter 30, well, I don't know really. What do you think? 28.55. Let's do that. All right, and stop loss at 19.30. Very good. Now, the risk, how much are we risking?
1%.
Excellent, 1%. Very good. So there you go. And now, well, before we press anything, we're going to do it together. One thing you can look at is this. Can you see that the stop loss is 139 points, right? You see that? How much bigger does the take profit need to be? 3 times. So a quick way of looking at this, take this number times 3. If this is smaller then you know you have a bigger risk-reward ratio than 3. I'm going to say that again. Everybody please pay attention. This is the distance between your order price and stop loss. The distance between what?
Order price and stop loss.
Thank you. That's 139 pips. Okay? The distance between the take profit and order price is 786. Now, how much bigger does the potential risk, the potential reward needs to be? How much bigger than the potential risk?
3 times.
3 times. So use your calculator. What is 136 times 3?
139.
139 times 3?
417.
417. So let me ask you this. So if our potential profit is 786, our risk is 417, is it a good trade?
Yeah.
It's a pretty good trade, isn't it? Because this is bigger. Right, so now we have a risk-reward ratio bigger than 3. We have 1% risk. We have our entry price, order, or take profit and stop loss in place. Are we ready to place the order?
Yes.
Are you sure? Why are you shaking your head? Nothing happens here? I know what you should do. Scream at it.
No, try to update it.
Update it. And another thing is, try to use, if it's not working, use Google Chrome. Google Chrome usually works until it doesn't. All right, are we ready? Placing order finger in the air, please. All right. Very good. We're getting there. Okay. All right. So here are the numbers. Take profit in place. Make sure you have the risk calculated. How much are we risking of our entire portfolio? Thank you. How much bigger does the take profit need to be? Are you good traders?
Yes.
Do you usually say yes? Yes. Okay. Help your buddy. Yeah. Celebrate together. Are we ready? Jenny, how are we doing? You're going to do something else? Okay. What do you mean something else? Okay, are we ready? Alright, so count with me. Are you going to celebrate? Yes. Celebrate like you've never celebrated before. Can you do that? Yes. Oh, really? That's yes. Can you do that? Yes. Alright, we will see. So, 3, 2, 1, and go! Yes! Up! High five to everyone! Did you make it? Yes, let's go. Yay! Celebration time, come on. Boom, yes, well done, Mike. Yay, nice, woo! Yes, yes, yes.
Awesome.
Nice. Yeah, well done, well done. Hey, hey, hey. Nice. Celebration. All right, let's clap it out. Hey. 1, 2, 3, and yes. 32 people, give them a high five and say you're an amazing trader. And break. Yeah, but let's go through this a little bit. And please have a seat. Have a seat, please. Now, I think we placed around 7, 8 trades, something like that. Way more than that. Yes, give yourself a big round of applause. So, one thing I would like to show you is, if we now pull up this middle part, and we look at our active orders. Welcome.
Hello.
Hello. So, can you see now that we have a couple of active orders? Can you see that on your screens?
Yes.
How many active orders do you have? Shout it out. 2, 3, 5, 6. Excellent. Okay, anything else? Last one. 1, 2, 3. Sold. 4. Okay. So, if we now go to positions, however, how many open positions do you have? Oh, wow. Very surprising, isn't it? All right, so 7. Some of them you might be down a little bit in. Like oil fell 30% from yesterday. 9, you're in 9. How many trades have you placed? You went a little bit bananas. Banana. Okay, so one thing we can take in consideration is, right, so now if you're down a little bit in your VCAs, what are you going to do? Buy more, if it's right. So look at your VCA positions and see if you're down then at your next entry levels, then you can get in again. Isn't that true?
Yes.
Exciting?
Yes.
All right, turn to the person next to you, give them a high five and say, I'm excited.